here, but anyway, well, I believe it turned double zeros on my computer screen, so I believe it's time to get started. And again, we thank everyone that is with us this morning. We got Mr. Matt Boucher, who's also a county extension agent over in Victoria County, with us this morning. He kind of co-hosts this deal. I'm glad that Dr. Welch, Dr. Robinson, and Christi Short, who's the regional communications manager for the Cotton Board, with us this morning. And again, we want to thank our sponsors, the Cotton Board, the Texas Corn Producers Board, and the Texas Sorghum Producers Board for sponsoring this this update. And just glad you're with us this morning. And at this time, I believe I will turn it over to Dr. Welch, and he can give us his update.
All right. Thank you very much, Bobby. Great to be with y'all again this morning. Let me get the slideshow set from the beginning, and I hope that you can see that grain market update slide.
Yes, sir.
Okay. And so again, great to be with you and bringing you the May grain market update. The couple of features that have been driving the grain market, I think, over the last several weeks. We're going to talk about those in terms of the planting progress. First of all, the report that came out on Monday shows that U.S. farmers have got about 80% of the corn crop planted as of May the 16th, and that's a pretty good pace. We're about a week ahead of average, and about a week behind a record-setting pace. So kind of right between those two. And one reason this is so important is that as we tend to get the crop planted earlier, it tends to have it's more positive related to production prospects, in that our yields tend to be, when we plant sooner, it's correlated to something above normal yields. And so there's a production response getting the crop in early. But the other piece of that is important, I think the market is watching particularly, is that there is also some positive correlation between planting pace and then the final amount of acres we get planted, in that the change between what farmers said they were going to plant in March and what they actually plant by the time we get the acreage report at the end of June tends to be positively correlated to an above normal planting pace. It's not a strong statistical relationship, but there tends to be some positive relationship in those 2 points. So getting a crop in early tends to favor production prospects, and it also tends to favor perhaps an increase in acres, which are both very important in a year in which we're looking at ending last year's marketing year with very tight corn supplies. The other factor of note in the grain market is that shift in the soybean to corn price ratio. This shows the relationship between November soybeans divided by the December corn price. And if you take an extension budget for, say, Central Illinois, and plug in these prices and average yields and average production cost, the price relationship that returns about equal returns between soybeans and corn is about 2.45. So at that price level, again, normal yields, normal cost, it really doesn't matter which crop you plant, that the net return in dollars per acre will be about the same. Back since January, we've been running at about 2.6 in that price relationship all the way through the end of March. And that would provide some favorability to planting soybeans relative to corn. Well, after that planting intentions report came out, we've seen prices have gone up in both commodities, but much more strongly in the case of corn, which has driven that price ratio down. So corn prices have risen relative to the soybean price, and it's shifting significantly then to profitability for planting corn relative to soybeans. So the question will be, with this price shift taking place right as farmers were really ramping up and getting the crop planted and going across much of the Midwest, will this price relationship influence the final number of acres that get planted? And again, not a strong, reliable statistical relationship, but there does seem to be some positive correlation between movement in the price at planting in that soybean to corn price ratio. When it moves favoring corn, that we tend to see an increase in corn plantings as well. Again, this will all played out as and reported on June the 30th when we get that acreage report. And this is why it matters so much. This is planted acres of corn, soybeans, wheat, cotton, sorghum, and rice going back to 1929. And you can see where we've been the last few years. We've had a pretty rough spring and had trouble getting all the spring crops planted. The prospective plantings report back in March indicated that farmers intended to plant 247 million acres of these 6 primary commodities. Well, that's a pretty good number. That's up over the last couple of years. But yet with the high prices that we're seeing, the expectation was that we would see something above that. In fact, in the record high prices of 2011, 12, 13, we were planting 252 million acres of these 6 primary crops. That leaves a slack of about 5 million acres that with a good spring and open planting conditions could still come into play. And that 5 million acres could make a big difference. And I think that given the conditions we're seeing, we're planting the corn earlier than normal. We've got a positive price relationship. We're planting corn. I think a significant, if we do see that increase, I think a significant number of those slack acres that weren't reported on the prospective plantings report could come into the corn market. This is the May WASDE compared to the old crop marketing year for corn. A couple of major differences. Planted acres aren't anticipated to change very much, about 91 million acres. The difference in production in the new year will be in yield. If we reach a trend line yield of almost 180 bushels per acre compared to 172 from that storm damaged crop last year, and much of Iowa being drier than normal impacted the average yield down to about 172 last year. Again, expecting something around 180 is USDA's first projection for the new marketing year. The major use component to look at would be exports. They bumped that again up for old crop corn, another 100 million bushels last month. Now, again, these are all-time record high numbers, about 2.8 billion bushels, trimming that down to about 2.4, 2.5 billion in the new marketing year, seeing some increase in ethanol use as the economy continues to rebound. We're expecting gasoline end use to continue to grow and getting that ethanol number back up to about 5.2. The record for ethanol is 5.6. So we're still, below, all-time highs when it comes to converting corn to fuel, but certainly a nice increase over the COVID impacted last year or two when it comes to ethanol production and ethanol consumption. Days of use on hand, 31 days is a tight supply. That's how we're coming out of the old marketing year. With that increase in yield and those few minor use adjustments, we're looking at raising that up to about a 37-day supply in the new marketing year, which is better, but anything below 40 is still a relatively tight supply. When we get that days of use on hand below 40 days, that's when we're in this record-setting price territory. This is the latest estimate for the 2020 crop, and then with USDA's new numbers for 2021, seeing that days of use coming back from about a 31-day supply back up to about 37, and with some great pre-planting and early season pricing opportunities, the current season average farm price estimate is up well over $5 a bushel, which is relatively speaking, that's a really good price relative to this level of carryover. The likelihood then of seeing an increased supply into the new year, I think, is a major question that the market is still trying to struggle with. If we do plant 91 million acres and we were to have a yield of 177 bushels per acre, ending stocks would be about unchanged. So if you plug in a yield of about 180, 179, that pushes this production number up over here and to the right, which would add somewhat to ending stocks. The market would be especially sensitive, I think, if we maintain that yield estimation and start to increase acres from, say, 91 to 92, 93, 94. Now we're pushing that additional amount of corn into ending stocks further and further up and to the right. And I think that could have a significant impact on what our price prospects will be later as we get into late spring and early summer. For instance, using USDA's numbers in the new marketing year, this is the 2021-2022 marketing year. These are USDA's numbers for a 91 million acres planted, 179.5 bushel yield. Here's our production numbers. Scroll all the way down to our days of use on hand, coming up from 31 up to 37. I plug these numbers into my pricing model, and it would anticipate or estimate the October average of the 2021 December futures contract to be about $4.40 a bushel. Given these kind of production and use numbers, about 440. And whether we hang your hat on that number or not, I would like you to see the sensitivity of how that number changes with a change in planted acres. And so let's say we plant an additional 4 million acres of corn. So we go from 91.1 to 95.1 million acres. That price, and leave all the other components the same in terms of our consumption, we would go from an October average, that December contract of 437 a bushel, 70 cents lower, dropping down to about 370 if you just change that planted acres number, 4 million acres. So I think that's in the back of traders' minds, that the anticipation will be we're going to see more acres when we come to that acreage report in June. How much will certainly be much debate and much discussion, but I think the market is leaning toward more acres. The question will be just how many more we're going to get. And this is what the price response has been on that December corn contract over the last month or so. We've had a nice rally since the last time we visited. In our April update, we had seen a little bit of topping out going into the May WASDE. And then on the day of the WASDE report, we did trade lower, and we were starting to test maybe technically some critical points on the corn chart. But it was really the day after the WASDE report that we broke below the 10-day moving average. We tripped the parabolic stop and reverse point. We tripped the moving average, convergence, divergence, and these are all trend following tools. And so technically speaking, we had several sell points that we triggered all on the same day following the WASDE report. And then we've seen, of course, some retraction in that December corn contract, closing yesterday at about that 543 a bushel. Seasonally, we would expect to see the high in that December contract in the month of June. Normally in the spring months, the prices will be much better than they are later in the year. Is that the high for the year? Of course, no one knows. It can occur in May. It doesn't happen very often. But so this, with all the uncertainty that we still have in our market, as well as what's going on in Brazil, their level of production, certainly I don't think this move is over. But yet to see us backing off of that highs that we set back here in May, I think it will be challenging to test these once again. What would be those factors that would concern traders in terms of having the supplies more abundant or more restricted going into the new marketing year? Acres, yield, what's going on in South America? That's going to impact the export picture significantly. Can we rally those prices back up? Absolutely. We've got so much uncertainty ahead of us. But yet these have been some great early season pricing opportunities and not inconsistent with what the seasonal patterns would suggest. We typically don't set the high of the market in May. In fact, going back to 2003, the high of that December contract has been set in May only one time, and that was in 2018. It's much more typical that you would see that high set in June and in July, in those again those late spring months, again around that final acreage report and the growing condition updates that we'll get as the crop is getting established, up and going, and in fact even getting closer to tasseling and some of the reproductive stages of maturity as we get into July across much of the country. So again, most of our better pricing opportunities in the spring. Unusual to see that in May, but certainly not unheard of to see the high already set in this market. Be glad to take any comments or questions that you have. There's so many dynamics still going on in this market that we need to monitor, but we are still seeing, even with the setback we've seen in prices, some tremendous pricing opportunities. And there are some tools and some things that we can apply to create price safety nets and create price protection, especially as we get a better handle on what our production prospects might be. We might employ some of these to set a good price floor, a price safety net under these markets. Whether this is the top, nobody knows, but we are seeing, again, some of the best pricing opportunities in 7 or 8 years, and we just hate to see those get away. So again, I welcome phone calls and email. Be glad to discuss those with you at any time. Always good to be with you.
Thank you, Dr. Welch. Lots of good information there. At this time of the year, it's always one of those times when things are still kind of iffy, but with the amount of rain and things that's going on, it looks like we should be able to make a crop. So,
Well, sure, you bet.
Well, thanks again. Got Dr. John Robinson, who's the cotton specialist, extension cotton specialist, and with us again this morning. And thank him for being here. And I will turn it over to Dr. Robinson.
Okay, Mark, I think you need to stop sharing. I can't share my screen yet. Yeah, it still says that the screen sharing is on from Mark.
Bob, as the host, you might have to help Mark out. He might be stuck. There you go. Yeah, there it goes.
Okay. All right. So a lot of what you've heard about grain market dynamics are going to be true for cotton as well. We're in a fundamentally tight situation that's going to continue with the new crop supply and demand numbers and outlook. And there's speculative buying and selling being as influential as always. Here's a picture. The red line there is the old crop July cotton futures for the last year to date. And the blue line is the new crop December. So, going back a year, you can see this big rally that was the recovery from the pandemic. We bottomed out below 50 cents, and then we had this big recovery that was driven in part by a lot of export sales to China and then to other folks, and it ran up here and peaked in the mid 90s for the old crop, and in over 85 cents for the new. And then we had a reset. There was some selling, speculative selling there, and then we took off again. And a lot of this rally was kind of, I would say, spurred on, or it was on the coattails of the rally in the grain markets. So corn and soybeans are exploding here, and cotton's getting pulled along for the ride. And then, as Mark noted, there's been a little bit of a reset here recently where we got maybe a little too overbought, and so we've had somewhat of a sell-off there. I want to point out that these last peaks, and then that reset and that peak and that reset, corresponds real closely. There they are. And it corresponds real closely to the buildup and the drawdown of speculative buying. And I'll talk more about that at the end. But there's the outside markets have been heavily involved, and tied in with that is how the stock market is doing, how the dollar is doing, how the expectations of COVID is getting worse in some places in the world, or better here. That's all working into what's driving these speculators to buy and sell commodity futures. I'll talk more about that again at the end. So again, Mark pointed out we had new supply and demand numbers from USDA for cotton. They're shown here in this column here. They tinkered with the 20 crop numbers, kind of in the manner that we thought. They finally cut production from 14.7 million. They cut it 90,000 bales to lower that number, and that squares it with what the Jennings and the Classings were showing, fewer bales than what NASS was projecting. So they've reconciled that. They also bumped up this export sales number because we've been shipping a lot of the bales. We've sold a record amount, and we're shipping a lot of those bales, actually exporting them. So they thought we'd have a higher target. So they gave us that pretty tight carry out from this year and carry into this one. The assumptions that USDA made here for the 21 crop were really not surprising to anybody. They chose the 12 million planted that's from the prospective plantings report back in March. They're assuming 20% abandonment, and that's just based on regional averages. They're assuming roughly 850 pound yield. and that's based on historical averages. And they come up with a 17 million bale crop, which with the carry-in gives us a 20+ million bale supply. And then they made an assumption about somewhat lower, I guess you call this exports number 14.7 million. I'd call it back to normal. This was record high. This was pretty dang high. This is kind of back to normal. Part of the reason that I think they're projecting somewhat lower exports is that Australia is planting more and Brazil is planting more, and some of the West African countries are planting more. So they're expecting more competition from our export competitors. So anyhow, 14.7 million is still a pretty good target. And it leaves us, here's the bottom line, it leaves us with just over 3 million bales of ending stocks by USDA's estimation. And that's tight. That's we've had futures in the 80s running up to the mid 90s based on this kind of a tight outcome. So now this one is just a little bit tighter than that. So again, fundamentally, this is projecting and suggesting price strength. Now, let me talk about it. I personally think that the outcome may be tighter than what USDA here is projecting. So the first point I'll make is relating to what actually is going to get planted. This is the breakdown. This is last year. The blue bars are last year by region, and the green bars are what USDA projected in March. They thought that Texas would be the same and Oklahoma and Kansas be slightly lower. That's why that's a little lower than that. And this is again in March, they projected somewhat similar plantings in the Delta region and a little bit more in the Southeast. Now, if you go to those regions now with the run up in corn and soybean prices, you'll hear folks telling you that cotton is going to be lower in the Delta and in the Southeast, that peanuts took some ground, corn definitely took ground, and soybeans took ground away from cotton. Kind of at the margin, people were planting, and they come up to one more field, they're planting corn, they come up to one more field, and let's go ahead and plant that one to corn too. There's stories like that. I mean, we'll see at the end of June, but kind of my expectation is that there'll be fewer cotton acres here and fewer here. The question of what's going to get planted in Texas is a interesting question, because ordinarily when you have a drought and you have a good insurance price, we don't lose acres. But then again, the sorghum cash price is really, really good. And I've, again, just heard anecdotal stories about people putting sorghum under their irrigated, under their circles out in the Northwest. So we'll have to see how that plays out. The long and the short of it is, I wouldn't be surprised if we only had 11.8 million acres planted instead of 12. So that could come down, which would tighten this up. If we only, if we lowered that number and still had 20% abandonment, then we'd be 16 point something million. So there's that question. How many acres are we actually planting? The other big issue is that USDA is assuming 20% abandonment. And, even with the rains we've had in the eastern half of the state and very scattered in the western half of the state, it's going to take a lot to get us actually out of the drought situation that exists out west. And so until I see otherwise, I'm going to assume 30% abandonment. And if we had that would give us, instead of a 17 million bale crop, it'd probably give us about 15 3/4 to 16 million, which, you whack off a million and a half bales, and you're winding up in a tight situation. Instead of 3 million bales of ending stocks, you're going to have 2 point something million. And in percent terms, that's going to be 11 or 12%. And like Dr. Welch, when you plug 11 or 12% stocks to use into my little forecasting model, you wind up with a forecast of December cotton averaging 83 cents a pound in the month of October, which is pretty, seasonally, that's very high. So we'll have to see how it plays out. I don't know if it's going to be 20 or 30% abandonment. I would lean to the higher. I don't know what the acres is going to be. The market's going to be trying to guess that from now till the end of June. So we'll have to see. And then I'll return to this speculator's comment. If you look back in history, big price spikes are generally accompanied by big buildups in these guys buying the market up or selling it down or buying it up or selling it down. They're very influential. They're kind of like gasoline on a fire. And what I'll simply point out is where these guys are right here, there's a lot of room to grow. Historically, they were a lot higher up here. And for every 10,000 contracts that they buy, that's a penny in the market. So if December cotton is at 83 right now, there's plenty of room for these guys to buy it up to 86, 87, 88, to push it to 90 and push it higher than 90 if they get on a bandwagon and they start reading headlines about how dry it is or what have you, or how much acreage, how much fewer acres were planted. It's this time of the year we typically go into a weather market, and this year we're more prone to a weather market just because we started off really, really dry. So I think there's going to be some speculative fireworks that'll probably take us, when it's all said and done, I think December futures has the opportunity to trade up to and over 90 cents, and maybe by harvest time get back into the lower 80s and upper 70s. That's what I'm expecting. So again, like Mark, if you have any questions, I'm happy to visit with them on the phone or by email. And I'll hand it back to you, Bob.
Good deal. Again, greatly appreciated. Good information, and hopefully things are looking up on pricing for cotton. So I know that we've been in some lower pricing for the past couple of years. It's kind of nice to see at least it elevated to some extent. So
yeah.
All right. Well, again, thank you. And now, as I mentioned earlier, we have Christi Short, who's the Regional Communications Manager for the Cotton Board, and glad to have her with us early this morning, and appreciate her getting up and being on with us. And with that, I will turn it over to her.
Thanks, Bobby. Thank you guys for having me this morning. Like you mentioned, I'm the Regional Communications Manager for the Cotton Board. So I cover y'all's area down in South Texas, but also much of the rest of this state, the Rolling Plains, Southern Rolling Plains, far west. And then I go out to New Mexico, Arizona, and California. So I'm really happy to be with you guys today. We have actually in our office at the Cotton Board and at Cotton Incorporated kind of started returning to business as usual, if you will. We've gotten a little bit of leniency on traveling to meetings, getting out and doing farm visits. So I'm looking forward to seeing some of you guys in person in the near future. We're also looking forward to hosting some of our regular programs in person. So we're looking forward to having board meetings in person and our Cotton Incorporated tours, which I'll talk about here in just a second. Just kind of as a reminder, the Cotton Board and Cotton Incorporated are very much companies that work hand in hand. A lot of times we report on what each other are doing. The Cotton Board is the group that actually collects that per bale assessment from growers, and also the importer assessment on cotton content that is imported back into the United States. We have oversight over the program, and we also get to communicate back to stakeholders what the program is doing on their behalf. Cotton Incorporated is the entity that actually carries out the Cotton Research and Promotion Program, whether that's conducting research, product development, implementation, and then they also get the fun job of communicating to consumers, creating that demand for cotton and home textiles and clothing, and then also making sure that bottom line profitability we see for our cotton growers, for our stakeholders. And of course, we do have governance by the USDA, since we are a governmental cotton research and promotion program. The 2021 budget that Cotton Incorporated and the Cotton Board had been operating under this year was $80 million. That is a decrease from 2020. Shouldn't be much of a surprise with market prices, planted acres, the COVID-19 pandemic, but this is still an extremely strong budget for us to move forward with all the projects that we have going on the consumer marketing side, the ag research side. We were still really fortunate to be able to have such a high level of budget and not have to cut too much in areas that need some of those more long-term funds, if you will. The top program priorities that we've been looking at in 2021 include sustainability, product innovation, farm profitability, cottonseed value, and lint contamination. We will be meeting here early fall to look at priorities and budgets for 2022. So we try to keep kind of this budget and priorities kind of looking forward in advance, so we can make sure that we're using the best resource and the best funds, and we have some great priorities coming out through Cotton Incorporated. This is just, I've already kind of told you the areas that I cover, but just wanted to show you the communications team that we have on behalf of all cotton growers across the belt. We have just recently added our Mid-South RCM to the team, Grant Somm. We're excited to have him and be fully staffed, if you will, across the cotton belt. So we're all looking forward to getting out and visiting with our producers, our gin managers, our industry partners. So look for us at meetings coming up. We are also so excited to be hosting, or hope to host, in-person tours of Cotton Incorporated this fall. This is a long-standing program. It's really the shining star of the Cotton Research and Promotion Program. I can give presentations all day long about what we're doing with your assessment dollars, but the best way for us to tell you is to show you in person. Every year, we want to take producers to the Cotton Incorporated headquarters, show them the lab space, the projects that are going on, hear from key and senior staff at Cotton Incorporated about what their department does. It's really such an exciting time for producers to come in and not only see the facility, but also get to interact and network with producers all across the cotton belt, maybe people they wouldn't have normally had the chance to interact with. We typically host about 3 tours a year. And we kind of had to pivot a few times this year and last year, but we were able to reschedule tours with Hotel and with Cotton Incorporated and what will work. We are hoping to host our Women in Ag tour in August and 2 multi-region tours in September. And so these tours, we cover the travel costs for producers and their spouse or their guest. And we just spend about a day and a half hearing from those senior staff at Cotton Incorporated, visiting the facilities, and then we usually get to see a commercial spinning mill or another operation in the industry there on the East Coast. So the Cotton Incorporated headquarters are in Cary, North Carolina. So it's really a great place for us to see some of those commercial spinning or cut and sew operations. If you are interested in attending one of these tours or know somebody that might be interested in attending one of these tours, please reach out to me. I'd love to get them signed up. And we will host them in 2022 as well. So if dates one year don't work, we can always look at the next year's dates. But we are so excited to be getting back to North Carolina and showing our producers the house that they built with their assessment dollars. A project that was kind of born of the pandemic that I know I've talked about to you guys before is Cotton and Coffee. But we've really enjoyed this opportunity to get to reach more people on a broader format. It's easy to call in for 30 minutes to hear an update from the Cotton Research and Promotion Program and the cotton industry, that we decided we were going to continue this through 2021. And I wouldn't be surprised if we continued it past that. So I have, the slate of dates here for our upcoming sessions. We'd love to have you join us. The next one that we have is going to be on June 15th at 7:30 a.m. Central. Again, it's a Zoom web call. You can have your camera on or not your camera on. Call us from the office or your pickup or the tractor cab, and we just love to share with you. In June, we're going to hear from Mike Shin and Mary Ankeny, who are in our product development and implementation department. And they're going to talk to us about how they use research, fabric development, and design to keep cotton relevant in every different area of the textile industry. And when new trends or new technologies are coming out, how they can utilize cotton in that space. This is going to be such an interesting presentation. This team is so great. It's going to be really neat to hear from them. So again, I'd love to have you join us. Let me know if you need the registration link for that, and I will definitely send it over. I am going to update on a few things at Cotton Incorporated quickly. We have launched a new consumer-facing advertising campaign. I was going to show you guys a video over Zoom, but we all know how technology, Wi-Fi bandwidths work in different places. So I'm just going to encourage you to go take a look at these commercials on your own time instead of you watching a frozen video on my Zoom screen. But this new campaign brings back a very familiar tagline, the fabric of our lives jingle. They decided, Cotton Incorporated, in about mid-April, launched this campaign with that jingle sung by music icon Carney Wilson. We really wanted to show and celebrate cotton's relevance in different spaces of consumers' lives. So this new advertising campaign brings out a few different personal stories and how there's an indispensable cotton item in these people's lives that have made them feel comfortable. As we all know, in clothing, comfort can go beyond just the clothes you wear, but how they make you feel confident, assured, comforted. And this new campaign really reminds consumers that cotton clothing really is the fabric of their lives and can make them feel those things. It's versatile, it's easy to wear, and easy to care for. There is also an opportunity for consumers to shop for the cotton clothing that's inspired in these new commercials by using the Shop Cotton section on the fabricofourlives.com. So these commercials started airing in mid-April on broadcast and cable television channels, ABC, Fox, HGTV. They are also streaming on online platforms, and you can find them on Cotton Incorporated's YouTube channel and on social media channels as well. So again, I encourage you to go out and watch these new commercials that are out. We're really excited for them. Consumers really recognize the Seal of Cotton brand and the Fabric of Our Lives jingle, so we think it's going to be very successful. The Cotton Incorporated Ag Research team has been hard at work over the last year, as they are each year. They fund about 400 different research projects every year across the Cotton Belt, some focusing on, ag farm research and some kind of more in-lab type research. In all different departments, if you will, or areas of the industry and of the cotton plant, the way it grows, economics, engineering, genetics, etc. We also fund projects kind of more on a local level through each state in their state support program. And this is a really good opportunity for the researchers in each state and Cotton Incorporated research staff to really focus on things that are localized, specific to growers in different areas of the Cotton Belt. We started state support update Zoom sessions this spring. Hopefully you were able to join us on those. And this was a really good opportunity for us to bring in researchers from Cotton Incorporated and from the different regions on a Zoom call to update growers and stakeholders what the research projects look like for them for the upcoming year. We're hoping to continue these update sessions, as it's, again, with Zoom, really easy to reach people where they are. Join us, from your office or the cab of your tractor or your pickup truck. And it's just a really exciting thing to be able to share, the great work that Cotton Incorporated and our localized research staff are doing with our grower assessment dollars. In the state of Texas, the State Support Committee meets typically every summer to allocate and fund projects for the next year. So this summer, the Texas State Support Program will be looking at what types of projects we want to fund with these dollars in 2022. Maybe some of them are continuing, maybe some of them are new based on some issues that we're seeing in the area. So stay tuned for some of the new things that we'll be working on your behalf. I do also want to mention our Cotton Cultivated site has recently kind of gotten a little bit of a facelift. This is an excellent resource for producers to use to find research topics, reports. We also have a wonderful weekly weather forecast that can be delivered to your mailbox, your email box, if you want to sign up on cottoncultivated.com. But it's really an excellent resource at your disposal to use to find top sources and region-specific information. And so I'd really encourage you to go to cottoncultivated.cottoninc.com, look through Cotton Cultivated, sign up for their weekly weather report, and it's really interesting. It's a great resource for our producers to use. And I would love to mention the U.S. Cotton Trust Protocol. We are now open for enrollment for the 2021 crop. If you have not enrolled in the U.S. Cotton Trust Protocol or you are not familiar with this program, I'd really encourage you to visit trustuscotton.org or reach out to me. I'd love to visit with you a little bit, but this is definitely an industry supported effort. You know, sustainability has really become a big factor and a big topic of conversation in the textile and apparel supply chain, but also with consumers. You know, and this is really kind of a consumer-driven sustainability effort. The U.S. Cotton Trust Protocol is really important for us as American cotton growers to kind of make our mark on the industry. That, you know, obviously, you know, the demand for U.S. cotton is high, but this program is going to allow us to provide that kind of seal of approval, if you will, to the textile and apparel industry, that, you know, our growers are enrolled in the sustainability program. And, you know, some of them might be requiring, if not yet, using verified cottons on their preferred fiber list. And this is how U.S. cotton is going to get on that fiber list. So I really encourage you to visit this website, or I'd be happy to visit with you about the U.S. Cotton Trust Protocol. And again, enrollment is open for the 2021 crop. So for producers, there's a little bit of work kind of on this pre-harvest stage, and then there'll be a little bit of work on the post-harvest stage. You can expect to spend about 45 to 60 minutes filling out a questionnaire about your farming practices. It is region specific and irrigated or non-irrigated specific. So we'll be going through some questions that are relevant to your farming operation. And then once you have harvested your cotton crop, there will be a few kind of tools that you'll be able to use in that post-harvest segment and some information that you'll need to input to complete your enrollment for the U.S. Cotton Trust Protocol. So please let me know if there's any questions you have for this, and I'd be happy to entertain them and walk you through the sign-up process. And that is all I have for this morning. Thank you guys again for allowing me to join and give an update on the Cotton Board and Cotton Incorporated. And I'd love to visit with you over the phone or visit with you by email. Please feel free to reach out to me, and I will turn it back over to you, Bobby.
Well, thank you again for getting up early with us this morning and giving us a report on what's going on within the Cotton Incorporated and the Cotton Board. And it's always good information. Myself kind of sometimes get confused about which is what, but again, thank you. And you made it very clear which is what. And so with that, Matt, do you have anything that you want to add or?
No, I don't. It's always good information, fellas and lady. Thank you very much for being here this morning.
Yes, and I guess with that, Dr. Welch, Dr. Robinson, I hope to be able to see you again next month at this time. So
Look forward to it.
That'll be great. Thanks.
all right, well, y'all all have a good day, and I guess we're done.
All right.
Thank y'all.